In just 5 weeks from tomorrow, the $7,500 tax incentive known as the IRA, because we're not going to use the long name because it makes no sense, will come off the sticker price rather than be a tax deduction to be taken when you file your taxes. Between now and then, there's going to be a massive amount of press around the Cybertruck that should create tens of millions of impressions about Tesla, and that is going to have a halo effect. Will this 1-2 punch be enough to supercharge sales in Q1 for Tesla? To help me figure that out, the co-host of the Good News Monday show, Larry Goldberg. Hey, Larry. How you doing?
Hi, Randy. Good. How are you?
Well, I'm going to have to give my regular intro here, Larry, because there is an important thing I need to make sure everybody knows. Okay, so please hit like, subscribe, and notify if you like Monday night, the Good News Monday with Larry. And then I want to remind everybody, this is your last chance, okay, at $20. Not your last chance to buy. It'll still be plenty available tomorrow, but you've only got about 8 hours, less than 8 hours left to buy it at $20, no matter how many you purchase. I've sold, Larry, can you believe it? I think about 150 of these since Thursday. So it's been a little crazy. So folks are buying them in 10s and 15s. And anyway, that's it. Just paypal.me/Randy Kirk. All in lowercase letters. Be sure to add an extra $20 if you're outside the country. And then please note whether you want the camo or whether you want the regular stainless steel. All right, Larry. From WTOP News. I don't know who they are, but they came up on my stuff. They're in Montgomery County, Maryland. They said the headline is, "You want to see Tesla's new Cybertruck? There's one in Montgomery County. Larry, there are other catalysts between now and January 1, including the interest rates possibly dropping, Model 3 debut, Model 3 Plus debut. The list is long. What do you think? Would you think this 1-2 punch is going to be enough to generate a big first quarter?
Yeah, I think we're going to have a really seriously good first quarter next year. I think we'll see the Model 3, refreshed Model 3, come out of hiding. I mean,
in the US.
They're in hiding. I mean, they're in Fremont.
Okay.
Trust me.
Okay. All right.
I won't say why I know that, but I know that.
Okay.
So I think they're going to come out of hiding. I think that's going to be a big, big boost to the market, particularly with the IRA, thing going on. I think production is going to be very good next quarter, both in Fremont. Fremont will be spooling up the new Model 3, so that may have an impact, but it'll only have an impact for the very first part of the quarter, because the truth is that the new Model 3 has got so much of what is in the Model Y built back into the Model 3, which is why they're doing so well producing Model 3s, the new Model 3 in Shanghai. I think Shanghai is going to be, I think it's going to be just going gangbusters. So, and there's no reason why Berlin and Fremont Model Y lines shouldn't be doing well. So I'm very, very bullish on 2024. Very bullish on 2024.
Very cool.
Yeah, and the Cybertruck production, nobody expects much of it, and they've talked that down. So I don't want to overdo that. But man, the Cybertruck is generating some excitement, I tell you. Now there's a halo effect about that,
Right.
The Cybertruck is going to get them into the stores.
Right.
And when people actually get into the stores and they see what Tesla's all about, they buy Teslas. That I've seen that myself. I've worked in the store, so I think there's an awfully big opportunity there. So yeah, I'm pretty bullish about next quarter. I'm pretty bullish about the Cybertruck event. I think we're in for a fairly good run by way of activity. Now, what the market does with that, I don't know.
So then, meanwhile, in the last couple of days, Elon's been putting on his diplomat hat and traveled to Israel. And while there, he suggested he'd like to rebuild Gaza, but he noted that Hamas needs to be destroyed before that rebuilding process can start. What did you think about his activities today?
It's classic Elon. He really takes the weight of the world upon his shoulders. He wants to fix the world. People who believe they should be the ones who fix the world get very bent out of shape about that. I'm not one to want to fix the world. I'm old enough to understand that can't really fix the world. But hats off to him for trying. Hats off to those who think they can do better. So my wife said she wishes he would just, run the company. That's the point of view. I respect him for what he does. I really do. And, at his age and his stage of life that he's doing this, it's a good thing.
Well, all right, let's shift gears then. We've got Sawyer Merritt reporting that, in fact, I'll just report both of these at once. We've had a couple of really good pieces of news with regard to legal issues. U.S. Labor Board dismissed the claims that Tesla had illegally fired employees working on some autopilot software in the New York factory in order to try to stop the union from organizing. So we won that one. And then Tesla just yesterday, well, actually, it's probably Monday morning when they filed lawsuit in Sweden to stop whatever branch of the Swedish government was trying to interfere with Tesla getting licenses for the cars they'd already sold. And they won that in a half a day. So,
well, it wasn't the Swedish government. It was the Swedish union getting the the department that delivers the licenses.
I see.
Stop delivering the licenses.
I see.
It's not a department, it's a service. If one who can understand the intricacies of these things, of these bureaucratic processes? It seems that Elon has this massive target on his back. Part of it he's erected, part of it, the haters have erected, and he kind of cooperates with them. But I will say that he has an incredible record in the courts. Incredible record in the courts. He does actually settle where he feels that, or where Tesla feels, I should say. Tesla feels that they're obliged to pay. I got a letter in the mail that I get $100 because they doubled the price of my Tesla roof, my Tesla solar roof.
I see.
And so I just got a note in the mail. I'm just going to get $100. So I put a line through it and I mailed it back. I said, I'm not interested. Actually, I settled with Tesla. I wrote to them and they came back to me and said, all right, we'll do it at the old price. Anyway, but the point is he's got a fantastic record, in the legal department it goes back, trial after trial after trial, and he hates them.
Yeah.
But he just powers through them and he does very well at them.
So then we have the whole business. We've, of course, back to Cybertruck again. We've seen all these folks in the showrooms, but also what's been popping up on videos all day yesterday and today is people that are out with their Model Ys or Model 3s, or I'm not sure exactly which models, and they are competing on the sand in the dunes.
Yeah, that's something.
with purpose-built Jeeps and other vehicles, and they're winning with sedans. So if those are winning, what in the world? What do you think when we get the Cybertruck out there on those dunes and on those off-road situations and in these competitions? Is the Cybertruck just going to blow all of them away?
Pretty exciting. Yeah, it's going to be something else. I just posted this just not more than 20 minutes ago, I posted a description by somebody who's a designer. I should look up his name. I should actually give him kudos. He's a designer, and he went to see the Cybertruck, and he was blown away. I mean, he's not a Tesla guy, but he was blown away. He wrote up, and I've posted it. You can find it in my X. I really should have nailed his name. But anyway, he described some of the design features that you don't notice when you're looking at the truck, but that are part of the design language and the design capabilities, and how the design team have been so brilliant in how they've put it together. And so the point that I'm trying to make is that he really explains why it is such an appealing design, what the features, what you think you see versus what is in there to make you see it. And, you know, it's worth reading, because it's hard to describe the first reaction to the design, and then how it grows on one, and how it becomes really part of your psyche, and how you think of the vehicle. So it's really a great read.
Well, let's turn to the economy then, Larry. By the way, if you're not following Larry, his name is always down below in the description. That's at Tesla Larry, and you can go take a look at that after the show is over, of course. So, Larry, as you know, I think that the oil is the most important commodity to follow because it impacts everything. And OPEC put off their decision.
And Elon's going to put an end to that.
Okay, that's true. But it will still affect a lot, because it'll affect plastic.
It'll be years and years and years before it's no longer the dominant impact on the economy, the dominant commodity impacting the economy, I should say.
Yes. So anyway, OPEC was going to attempt to reduce total production again, but they had a bunch of their African producers that balked at the idea. Reading a little deeper this today, I found out that apparently the Saudis were basically saying, look, we've cut as much as we want to cut. We don't want to be the only guy that's taking this on the chin. We'd like you guys to share. We're not actually looking to reduce it any more than we've already reduced it, but we don't want to be the only guy doing this. And they couldn't get everybody to go along. So we've got the decision coming Thursday, theoretically. But, you know, I'm wondering, on the other side of the coin, if the United States is apparently going to continue to break records on production and increasing even into 2024, Canada apparently is planning to continue to increase. Brazil is apparently going to continue to increase. Even if the Saudis cut another 500,000 barrels a day, will it just be made up by the U.S. and others?
Well, U.S. production is nothing that anybody plans. U.S. production is a free market. So, you know, and it is a swing producer, because as soon as prices go up, U.S. production automatically just goes up. And, you know, I hear every time there's this solid move up in the oil price, I hear people saying, in the Wall Street Journal writes, oh, the producers are not going to do it again. They were stung last time. They're just not going to do it. And of course, we produce it again. That's what the free market does. So I think what we've seen is the free market did its work. Now, if the global free market existed, probably the price of oil would ameliorate down a little bit, but not by much, because I think that OPEC, at the end of the day, is really subject to the swings and vicissitudes of the real market. So, yeah, look, China is hurting, and China is not growing. Until China reverses its growth, the oil market is going to drift down. That's, I think, the general reality. And, you know, as long as the United States is not driving its oil usage very dramatically, and as long as China is not driving its, who are the greatest oil?
Right.
It's China and US. I mean, they are the market.
Right.
Europe trails quite a lot behind now, because yes, they use natural gas, but their use of renewals have really eaten into the totals.
Yes.
So on balance, I think that we're going to see a fairly stable oil price. I'm not seeing a big rise in the oil price. And I think this has a lot to do with our economic circumstances, which we can talk about.
Yeah, so we have the bonds then headed down again today. I kind of said I thought this would happen.
Yes, you did.
I was shocked that we got up to almost 4.5 again. I think that was a 1-day deal because of light trading. So the bonds are back down to more in the area where I think they should be, although I think they're still going to go down to 4.25. Gary Black thinks they're going to go all the way down to 4 in the short term.
I think Gary's right.
You think Gary's right, back down to 4. Okay, all right. So now it may be that they hang up at 4.25 for a while, just have a hard time breaking through. But anyway, so you're in the same ballpark now that we're heading down on bonds. The yields, I'm sorry, that the bonds themselves will be climbing as yields drop to around 4%.
Yeah, and I think there are economic reasons for that. I mean, it's going to be very hard for the bonds to really get down there because just the amount of inventory.
Yes, that's going to be coming on.
That's going to be coming on. It's just so staggering. So, I mean, that's what's balancing the market right now.
So, but I did read, Larry, a couple of things. One is Arian was talking today and commenting about just how much money there still is on the sidelines, massive amounts on the sideline. Plus, apparently Japan is going back into the market.
It's true. There's a lot of money on the sidelines, and since 2009, there's been money on the sidelines.
Yeah.
I think as long as interest rates remain elevated, the money's going to stay on the sidelines. That's just my feeling. I mean, just what's the alternative investment?
Equities, real estate, gold.
Yeah, equities are very pricey right now.
Right. Real estate's very pricey.
Well, real estate's in terrible trouble. Commercial real estate's in terrible trouble. Home, I don't know. I'm not convinced that people are going to take these fairly large, and a lot of the balances are held by retirees.
Yes, a lot.
And they're not rushing to put it into risk assets, right?
Right. Yeah, which is why I think the bonds will drop, is because I think this is, again, I've never owned a bond, Larry. I don't know whether you have. But if I was ever going to own a bond, this is when I would own a bond, and that is not financial advice. Do your own homework.
Well, the bulk of my investment money is in bonds.
Oh, I'll be darned. Okay, there you go.
I only invest, a small percentage, normally about 10% of my assets, of my investable assets, into risk assets.
I got it.
Stocks and so on. Now, Tesla skewed that mightily, but nonetheless, my risk investments are a very small part of my portfolio. Mm-hmm. My bonds are by far the largest part of my portfolio, but I mean by a significant proportion. And so, I clip coupons. I mean, that's really what I do.
And by the way, just so I'm on the record on this, the vast majority, we're in our 70s.
Yeah.
The vast majority of my assets are in real estate, and in bonds are equivalent kinds of very safe investments too. And I only have a very small percentage of my portfolio involved in risk assets.
Right.
So that's only natural for somebody in their 70s. So Larry, you had,
before I put my money into these bonds and stuff, the bulk of my assets were in my business,
in business,
in my company.
Me as well. Yeah.
It's only in my old age that I've had the luxury of being able to move them into risk-free assets.
Exactly. Well, Larry, you have a bunch of slides to show us here about the state of the economy. So talk to us.
I think they speak to a lot of the stuff that we've been, talking about now. And so let me share my screen. And I know that I can share my screen. I know that you've got that pretty well organized now.
It's all set up for you, Larry. With any luck at all. Here we go. All right.
So this is a really interesting slide. I purloined it from Nick Colas's newsletter today, as I do a lot of stuff. His stuff is so great. But what this shows us, and this is September and this is October, and what these colors mean for these different states is the states that are growing and the states that are declining in economic activity by up to 1%, 0.1% per month growth, or up to 0.1% decline. So everything in the orange colors, from the gray to the gray, is neutral. Mm-hmm. Everything yellow to orange is losing money, is declining, is in recession. So red is 0.1, which is a recession. Mm-hmm. And less orange and yellow are, pre-recession, if you like. Whereas the blues to greens to bright green are the growth, between, a little bit of growth, medium growth, and very high growth.
Right.
And this is September and this is October. And this speaks to what I've said quite a lot on this program. And that is, we have a rolling recession. We have a recession in some parts of the country and in some parts of the economy. This is by state. What would also be interesting is by component of the economy as well. But it's interesting to see it by state because people can identify with their states. So it's interesting that back in September, all the way back in the old days of September 2023, we had Montana, Missouri, Michigan, that were, Missouri and Michigan were tending backwards. Wisconsin, Iowa, and Illinois were, they were just teetering on the brink. Montana was in the bad way, and West Virginia was in a bad way, and New Jersey was also teetering. The other states were from mild growth to a little bit better growth to real growth. And it's interesting, Montana right next to North Dakota, or right next to Wyoming, near Washington. But even Louisiana showing really great growth, Pennsylvania showing great growth. But when you go from September to October, look how the reds are growing.
And the darker greens are getting lighter.
And the darker greens are getting a lot lighter. Louisiana went from, dark to light. Wyoming went from dark to light. Washington went way back. I mean, they actually went back 2 steps. And, so even, New England went from dark green to light green. New York went from actually growth to decline. And so what you're seeing, and my own state, North Carolina, went from, fair growth to almost no growth. So what you're seeing is that as you get from September to October, you have a significant number of states slipping into decline. Mm-hmm. And, what that's telling me is that the Federal Reserve went too far for too long.
Right.
And the most, those states that were the most vulnerable slipped.
Yes.
And it's awfully difficult to reverse this. Now, some of this may be seasonal for all I know, although I don't think it is.
Well, part of it too, Larry, would be that how the strength of the third quarter was kind of outsized. So coming off of that strength, we would maybe expect to see some lightening of the situation, but not necessarily going into these darker yellows and oranges. But but I think you're right, though. It shows this. It's not all one picture. And I think if we showed it in terms of category by category, it would also be super clear. I mean, automotive right now is up 10% for the year. Who would know that? Okay. And yet at the same time, we've got retail falling off a cliff. Yeah. But it had a great Black Friday. So it's a very mixed bag.
But your idea about timing is also important, because even though automotive is up this 10%, if you look at automotive over the last 2 years, you'll see this tremendous dip, during the pandemic.
Right.
And now we're kind of making up for it. And I think you're going to see it slide very dramatically. So, again, it's this, we're in anything but calm waters at the moment.
Right.
And so, that understanding that is understanding, what I mean by this sort of rolling recession.
Right.
But on the other hand, if you look at the VIX, now the VIX is a measure of the volatility of the market. And the higher this number, or what they call the VIX, the more volatile the market is. That is to say, the greater the movement from day to day of a stock price.
Of the overall stock price, yeah.
Yeah. And what happens is that as the VIX goes down, so the market tends to go up. Because risk drops, the market calms down, people are more comfortable to come off the sidelines and buy that stock that they had, concerns about. And so what's interesting here is if you look at the level of the VIX now, 12.69, this is kind of like an all-time low. It's not an all-time low, but it's an incredibly low mark. We were at, back in March, April, we were up at 27.
Yeah. And even a month ago.
Yeah, just a month ago. We were almost at 22.
Yeah.
And now we're at 12.69, which is, it is incredibly low. And that's the reason why, if you look at the market itself, and this I stole this off X tonight. It's from Gergovan. I clipped it just a few minutes ago. What's interesting is these are the top stocks on the market today, the top
market cap
companies in the market today. With the exception of Tesla, our baby, with that sole exception, they're all at their all-time highs. Why? Because the VIX is down. Yeah. Why? Because there's all this money on the side. Why? Because the money's concentrating into those stocks.
Right. Very much so.
Yeah. And so, I think that what we're looking at in terms of this market, and this is why I'm, so concerned, I'm so negative about this market. We're looking at a market that has been pummeled by really bad, government action, both at the Federal Reserve level, but also at the fiscal level. Right. Over this period of the pandemic, the mishandling of the pandemic by both administrations, by the way. And then the supply
chain nonsense.
Yeah, and the reaction to it. And so you've got these enormous flows of money. You've got, as you pointed out a lot earlier, but all this money sitting on the sideline, but you've got, you've still got, bonds at pretty high levels, historically pretty high levels. So it's not a great situation.
And Larry, in order to get to these all-time highs, you saw $40 billion come off of the sidelines into equities just in the month of October, which is a very big number
And these are the names they went into.
That's what they went into. Yeah.
So that's looking back, and we can spend just a minute or two, wringing our hands about how badly the government's handled the issue of inflation. But if you look at inflation that was measured in December last year, last year 7%, and you see now we're at 3%. This is a brutal reduction.
It is the historically largest reduction that they've seen. Yes.
Yes, that was the point I was going to make. But here's what I maintain. Had the Federal Reserve Bank not clamped down as strongly as they clamped down, I think this would have happened anyway.
I do too. I agree with you 100%. Or most of it.
A lot of it.
Yes.
And to make that point very clear, here's an interesting graph, because these lines here are what the government is reporting the inflation rate is on rents, between 7 and 8% over the last year, and still at about 7%. However, the real number for inflation in rents was at 10% last year, in October of last year, and is down to 3% in September of this year. And we know that because the way the government measures the rents is that they take a 12-month look at it.
Yeah, yeah.
And what these guys do, what Zillow does, is look at the snapshot of it, what it is today.
Right.
So, all I'm trying to say is that we're in a situation that has been very, very badly mishandled. And I think we're going to see the impact of that over the coming year or two. I'm not sure how some of these states that are in such severe recession get out of it. I'm not sure how some of these industries that are in such severe inflation get out of it. And if the government doesn't ameliorate its actions, not the government, the Federal Reserve Bank doesn't ameliorate its reactions, there are many more states and many more industries that are going to slip into this mode.
Well, and Larry, part of the thing too is with the rolling recession that you're talking about, by category, by industrial category, what we see is that these things in a capitalist society, they work their way through. So right now, you have people, nobody's buying refrigerators right now. So it's impacting that industry dramatically, and that's going to be impacting in certain states. But at a certain point, after people don't buy that refrigerator for a very long time, they last, whatever, today, only 15 years maybe. Well, it's time to go get yourself a new refrigerator no matter what. You just have to, because yours ain't working anymore. And that's true for automotive, across the board. So these things tend
Randy, through. What you say is true to a degree, but refrigerators last much longer these days, and cars last even
cars
longer.
In particular, yes.
Yeah. And so what you're going to find, unfortunately, is that we've had this burst of auto sales because of the pandemic, the supply chain disaster of the pandemic. But I think you're going to see auto sales drop off a cliff.
Okay. Yeah, I have a different view on that. The aging auto stock, the
stock of auto cars
that are in your garage right now are getting older and older and older, and there's a point at which people just have this idea: if it's over 150,000 or if it's over this many years, they don't keep it anymore.
I mean, it used to be true.
My grandfather used to trade his car in every 2 years, no matter what. But he was pretty well to do. I always, in my 20s and 30s, it was the 100,000 mile thing. As you point out today, 100,000 miles is nothing. But I think for almost the vast majority of people's 20 years is about it. At 20 years, you're going, no, this is it, because the expense of keeping it starts to become more than the expense of the payment. So anyway, I just think once interest rates come down a little bit, and the inventories are there, and hopefully it'll be people that are putting their money into EVs or BEVs as opposed to into ICE cars more and more as they see the value proposition and recognize they can get an immediate savings by not paying for gasoline and not et cetera, et cetera. Yeah, that's just me.
Yeah, and I see I am seeing the other side of that coin. I think we're at the end of that cycle of how people buy cars, and I think we're going to see. I think we're going to see a very different market in cars, particularly as FSD becomes real.
That's a whole nother story. That's an entirely different project that we could go on another day.
Yeah.
But Larry, I also wanted to comment on your rent thing too, as well, just again to talk about how the economy just takes care of these things. So you had these high rents. You were talking about how it works with oil. Same thing with people investing in multi residential properties.
Yeah.
Then all of a sudden people built a whole bunch of rental property. And so now that has reduced that had nothing to do with the Fed. In fact, it probably would have been even more of a reduction in rents if the Fed hadn't raised interest rates, because there would have been more people building units because they could do so at a lower cost. So anyway, but it's a perfect example of where the Fed is probably having a counter effect on the rents, as it has, in my opinion, also on housing, because nobody's building housing at this point.
Right.
And those houses that they are building, that's the next story. The houses that they are building are not selling. So new home sales today missed by a bunch today, and it was revised downward from last month. So it was a double miss. Folks are not going out and buying those new houses, even though they're not. There's no existing homes to buy, but they're not buying the new houses either. That could be affected by interest rates, certainly, Larry.
Yeah, I agree with that. Anyway, I mean, I have concerns about this economy and we're going into an election year. People are going to start panicking around about February. March, they're going to be in full flight.
Panic mode.
Yeah.
Well, I did run into an article, Larry, that helps me make my demographic case. So I couldn't help myself but bring it up. So this is from Business Insider. As more and more countries age, there will likely be significant implications for inflation. Jen and Freer, these are two guys' last names. I didn't write down their first names. Countries will invariably fight this demographic headwind, but the end result of aging will not likely change. The population of Japan, the oldest economy in the world, began to meaningfully age in 1990, and since then, its inflation and interest rates have dropped. 3 decades of low inflation there came despite the Bank of Japan's bid to stimulate demand with unconventional monetary policy. So we have all of these other issues that the flu and the supply chain issues and everything else. We have all these other issues that we're looking at, but I continue to maintain that this aging population, even with a lot of immigration in order to keep our population increasing rather than decreasing, but just the aging itself is affecting how people spend their money, and that this will be disinflationary over time.
No doubt.
Okay. All right. Oh, by the way, they say they expect this trend to play itself out in South Korea and China near term. As they're
South Korea, China, Russia,
right.
Japan. I mean, these are, going to be very, very, very badly struck by this problem.
Right.
We're somewhat inured to it. I mean, we're doing better than most economies. Europe is not doing so well, although immigration to Europe has been very robust.
Yes, it has. So last big subject before we take a look at where the markets are now at the pre-markets are now, Larry, there's a lot of talk from folks on X and in the community about Tesla buying a chunk of X.AI. And Elon Musk said he's going to talk to the board about it. Do you have an opinion about whether you think this is a wise use of Tesla's money, and or whether XAI should open the opportunity up to the Tesla folks?
I think it's in very much in both companies' greatest interest to be closely involved with one another and to ensure that the relationships are close and in fact are unbreakable. I think the risks for Tesla are as great as the risks are for XAI if they do not do that, because Tesla's knowledge of vision, XAI's budding knowledge of large language models really lend themselves to being merged and would be the differentiator for XAI, and by all means a major value add for Tesla, both in the car and in the bot. So I'm all for it. I think there should be an exchange of equity is what I would like to see, so that XAI has got a significant piece of Tesla and Tesla has a significant piece of XAI. I don't know if there's such a relationship between X and XAI. I would hope so as well. I think
I think he said, I know it's going one way at least. He said that X would get 25% of XAI.
Yeah. So I think there's a huge value add. And the other reason that I would like to do that is I'd like to stabilize the relationship of Elon to the three entities and make them, invulnerable to outside forces. I get very worried about these outside forces. You saw what happened to Sam Altman,
right?
And I mean, he had it coming. Well,
that's another story, right?
That's for another day. But yeah, I mean, I would love to see a strong, stable, and unbreakable relationship between the three entities.
All right, good. I agree. So Tesla in the after hours is flat. It's up 11 cents.
It was flat all day.
It was flat. Well, Larry, there's this pattern. I don't know if you've noticed it. If Tesla opens up, I believe it's a whale or a couple of whales or somebody is coming in. It's happened like, I would say, half the days out of the last 4 weeks. If it opens up strong against the market, somebody comes in. I mean, the line on this, I don't know if you can see my line right here, but it's like straight down. That's happened over and over and over again in the opening 10 minutes. And then it just takes the rest of the day for it to get out of the back into the green. But we ended up a little in the green today. I'm looking for this week to be, I think the FOMO has to be there, but maybe there's not enough FOMO to make it move. I'm not sure.
Yeah, I think it's, unless there's some announcement that I'm not expecting, I think it's going to be a non-event from a stock price point of view.
Okay. All right. Even leading into it.
Yeah.
Okay. And then if we go on to the rest of this, the treasuries, by the way, the 4.398 right now is very close to its low for the year. Let me double check that. I think I was right. I'm sorry, that's not correct. I'm sorry, that's not. In April, it was down to 3.25. So I'm sorry, very sorry. That was completely wrong, but very close to its recent low. You have to go back to September to get that kind of a low. But it is headed down. And right now it is the 10-year is at just under 4.4 as we in the pre-market. We have got just a second here. I've got to back out of this. We have got it's being slow on me here. We have got the Bitcoin 37.2. It's been in a range for a while now. We've got the dollar a little weak. It has been a little weak, but people kind of expect that if the bonds are down, the dollar is going to be down.
Yeah.
Gold is way up now, 2017. Again, I saw at least one pundit today saying that was Japan, that Japan is for some reason really jumping back on bonds and gold. So not sure how much of that is verifiable or if we could get a second, but that's what I'm hearing.
Well, I said last week, Nick Colas said buy gold.
Buy gold. Maybe he knew Japan was going to be jumping in.
No, he's very strong on gold right now.
And then oil is flattish at 75 still. And then we just talked about bonds. So, I'm sorry. And then Larry, I did do a little deeper dive on copper today. Copper is almost exactly in the middle of its trading range for the last 5 years and in the middle of its trading range for the last year. So almost exactly in the middle.
Well, that means pretty steady as she goes. That's, I think, what it means.
Okay. And today
there's a balance. There's this balance.
And today it was pretty steady as it went. So there you go. So, yeah. Larry, as always, thank you for co-hosting. A reminder to everybody, your last chance, not your last chance to buy it, just your last chance to buy it for $20. And it doesn't matter how many you want, 1 or 20. Look down in the description below. You can get all the details of how to buy your Cybertruck bottle opener and refrigerator magnet.
and a word for David Kasman, at David Kasman, Kasman art, A-R-T, at David Kasman art. He's the guy with that fantastic thread on the design features of the Cybertruck. That is from a design perspective, pure design perspective. On my X, I actually linked to that thread, so you can read it there.
Perfect. Thank you for bringing that to everybody's attention. It sounds like a great read. Larry, yeah. Okay, we'll see you, if not before, we will see you on this Friday night because there's no labor numbers this Friday, and so we got no Kathy Friday night. Yep. That because it's on the 1st, it may move it all the way to the next Friday. So yep. Friday night, Larry will be back to co-host once again. And thanks again, and to all of you out there. It's been great talking to you.
Thanks, guys.